Hello traders out there in Traderland, this is the weekend edition. My name's Dez here at Grok Trade. This video is good through January the 15th, 2012. And the week here ended on Friday with the Dow down 0.4%, the S&P down 0.5%. And another 0.5% drop here on the Nasdaq. Russell's down 0.8%. Bank's only down 0.5%. VIX up more than 2%. And gold down, silver down 1.7%. U.S. oil up 0.26%, but the dollar rallies quite a bit, up 0.8%. Again, that's for the Friday numbers. The big news is the Standard & Poor's rating cuts. At this moment, it looks like France loses its AAA rating. It's been knocked down a notch to a AA rating, and there's other downgrades expected. 30-year mortgage rates are at a record low at 3.89%. Wow. Copper rallies, and at this moment we have crude oil at 99.25 and gold at 16.40. Let's get looking at some charts. I'm going to be looking at the Dow here, the S&P, and Nasdaq. I'm also going to look at the bank, and I'd like to also bring in the US dollar and crude oil, and take a gander at gold. So we're going to be looking at a lot of charts. And now, before I get into that, quickly, mentorship is coming up January 21st, 22nd, and 23rd. It's done online. It's live and online. And if you've been thinking about it for a while, everyone needs a trading mentor. Let it be now. Let us help you in your trading. Let's quit losing money. Let's put a tourniquet on the bleeding and get things turned around. If you want a video that you can watch that will give you all the information you could possibly want, I will email that to you. But you just have to email me at mentor@groktrade.com. I will send you that video, and it will answer every question imaginable for the mentorship. And it will also come with a psychology analysis video that you can watch and benefit by. Alright, let's get into technicals. The Dow here, daily, big drop with the news of the downgrade by Standard & Poor's, but we rallied back, clawing our way back from these lows to close the day monetarily bullish. So with that, I want to show you a couple things here on this Dow. We dropped. Look what we touched, a trend line, and rallied right back. That trend line comes from this swing low to this swing low, up. We touched and bounced. And then look where we closed, right there at this swing. See this? We come up, swing, pulled back, popped. Right here, what was acting as resistance is now acting as support. That's a market axiom. And we look here at the monthly chart on the Dow, and this big trend line coming higher and higher, and then we broke it. What was acting as support is now acting as resistance. We're up 1, 2, 3, and 4 months now, but finding nice resistance here. But we did break a major area of resistance that was acting as support here and support here. Now we are above that. But we came up, touched that trend line, came right back down. We're having a hard time with the 12,500 mark. Let's go over here to the S&P. Let's start here on the daily. The S&P. We have this area coming across. We broke over and we closed higher than that. We still have a lower high and a lower low, but we did rally back. The question is, can we sustain this level? This level, and I've shown this here for a while, but this 1285, can we stay above that? It's important to stay bullish in the markets. And if we look here at the monthly chart, let's actually go to the weekly first. If you look here at the weekly chart, come across, see this swing high? We did close higher than that. That is a bullish move. For the weeks, we get 1, 2, 3, 4. We're 4 weeks bullish right now. And really a lot of upside potential if we could keep growing and keep heading northbound. We're above the histogram or the zero line, and that looks fairly well. Look here at the monthly chart. We're looking at this little pinching pattern. We're popped. I mean, we're still quite bullish for the month. It's not looking fairly well. If I go here to the Nasdaq, start here at the daily. NASDAQ up, lower high, lower low. So we are pivoting, we are heading down, but we have a dragonfly doji. A lot of consolidation right here taking place. We need to stay above this 2700 mark, so watch 2700. If you go here to the weekly chart, symmetrical triangle, boom, we broke out. We're above the 50-week moving average. All looks well. We are decisively above the zero line on the MACD down here at the bottom. And then our monthly chart had this pinching pattern. We're starting to pop over. Not too shabby, but we have major resistance coming up right around 2750 to 2755. So keep your eye on that. You know what? I'm on a roll here. I'm going to show you the small caps too. Small caps, support. We're above that support and above the 200-day moving average. We're pretty extended here, so we're due for a pullback. Here's the weekly chart. We're at a resistance, 50-week moving average, finding resistance, and a big area of support. Support is now going to be an area of resistance. So the markets are actually in an area to see a turnaround, start heading southbound. If you're looking here at the monthly chart, this little pinching pattern, boom. So it's looking nice. We do have resistance at 800 if we do keep going northbound. Let's go to the financials, and on the financials, here's the daily chart. We're just going higher. Everything looks nice on this, but we are overextended. If you look at the MACD, starting to roll over here, and if you blow this up, you have a negative tick on the histogram. Go here to the weekly chart. Look at this, boom, breaking out major moving averages. We stall at the 100-week moving average after this nice extended run, and the question is when will it reverse and give us a pullback? When will we have another one of these legs right here? Will it happen soon? Maybe. So just we'll have to be watching this pretty closely. Go to the monthly chart. This is really bullish. Resistance. We broke resistance. We're over the 20-month moving average. That looks very nice. The VIX, volatility index, monthly chart, we're down. When the VIX is low, it's time to go. Last time we were here, boom, we get a major spike in the VIX. That was, to start off 2010. Then we dropped again, start off 2011, boom, another spike, almost making it the 50 here on the VIX. I mean, we're hovering just below 21 right now. So every time we pull back, we get these spikes. We pull back, spike. We pull back. Will we keep pulling back to these lower levels, or is it time to spike? So something to be watching for. Again, this is the monthly chart on the VIX. Here's gold, GLD. Major support area. We get this bounce, big run, and then a drop. Anytime you get these big pops and then a drop, almost a tweezer top here, in these big chunky red candlesticks, it's almost a telltale sign that your trend is over. It's going to break down, go into maybe a double top formation or a triple top, or a head and shoulders reversal pattern. If we get one of those, gold's in a lot of trouble. Look how extended we are, price action is from the moving averages. Really extended here on the monthly chart. But all is well if we can stay above this trend line. If GLD gets below, let's say, 155 area, especially if it gets below 150, be very careful with gold. The weekly chart, we had this big bullish pennant that actually broke down, and now for the week we're trying to rally back. It's breaking an area of resistance, but it's just a little pullback here. You could almost make an argument that this is a bull flag. If I copy this, if we go boom, and then break out of this to the upside. So if this apex of this triangle right here, if that apex is broken, we're going to see a big run in gold. So if we can get past 165, that's great. If we go below 155, we're in a lot of trouble. Remember those two numbers, write those down. On the daily chart, we're very extended, looking for a pullback here. Crude oil. Take a look here at crude oil. Draw a couple of trend lines. Crude oil is in a lot of trouble. This is USO. This is a rising wedge with a bearish divergence on the MACD. And we're starting to break down here on some significant volume. We have closed on the daily chart here below the zero line MACD histogram area. But we actually broke this on Thursday. Gap down, ran up on Friday, but we're on the wrong side of the trend line. This trend line, we're at a resistance point. So crude oil is in a lot of trouble. If you look at a weekly chart here, we have this big drop, a run up. If we do drop, you're going to have a M for murder. This is a double top trend reversal. So if we do drop, clear in this area, you will have a big M here, double top formation. And then we go over here to the monthly. The monthly, we're just chewing around down here at those low. Big drop, just chewing above the 20-month moving average. But here's the thing. We had this big drop, a few days heading higher. This is actually a great setup. This is a bear pullback looking for an awesome opportunity here if we do drop for a short. If I do a copy there. So this thing, we could see USO get down to below 26 pretty fast. So something to be watching for. Again, this is the monthly chart. And let's look at the US dollar. This is a monthly chart on the US dollar. We had this falling wedge, but then we broke below it. Now we're heading higher. I'm going to take this line here. I'd have that line and this one. Drop, pop, and we're looking for a drop. However, we are heading higher at this moment. Really nothing to stop this from getting to this upper trend line. If we keep going higher, it's going to weigh heavy on the stocks. If we do drop here, stocks should be buoyant and continue higher. I go to a weekly chart. Weekly chart, we have a double bottom. Drop, double bottom, pop, pull back, and we're rallying. So as far as the week is concerned, pretty strong. Overextended, waiting for a little pullback here on the weekly. And then the daily, choppy, just heading higher. I do once a week a stock picks V-newsletter. It comes out on the weekend. And I do these picks, and here's a couple of them. ACN, falling wedge, we broke out of it. And matter of fact, I'm an institutional trader. I do trade an account. For those with a larger size account, I'd be happy to talk with you about managing your money. You can send me an email at des@groktrade.com. We can talk about it. But in the account, what else do we have here? We have IPGP, and this one's doing really well. Big run here. Still have this one. And what else? Yeah, this one's symmetrical triangle. See how things coil? We coil tighter and tighter. All the moving averages coil tightly, and then boom, big pop. Nice volume for follow through. Looking all right. This one, Time Warner, another triangle play. Boom, and this thing just has been on fire for a while. And WCC. But I tightened all my stops on these. These guys are getting ready to drop, I believe, if the markets pull back. So this one, ZOL, in this one too, but I got tight stop losses. I expect to get out of quite a few of these. Have TZA as a hedge going right now on the account. So if the markets do fall apart on Tuesday, we are protected. We have Martin Luther King Day coming up on Monday, and so the markets here in the US will not be open. If you want to trade alongside me, feel free to do so. I do a Stock Picks V-newsletter, like I was saying. It comes out each weekend. It's only $30, $1 a day, and I give you 4 groups of stock picks. But one thing that separates us from everybody else is our stocks go through heavy vetting. We go through a lot of fundamental criteria for a stock to make, and then I give you some technical setups on those fundamental stocks. So we pick our companies fundamentally and we trade them technically. That's what separates us from everybody else. We should actually be charging $200 a month for the service, but right now it's $30. If you want to be a part, feel free to join us. Just click on the front page there and you'll see a V newsletter, Stock Picks V newsletter in the bottom right quadrant. Just click on that and get signed up. Check it out for yourself. I think you'll be very pleased that you did that. But as a reminder, if you want a video emailed to you, it's a big one. It's going to be over an hour. It's going to be very educational because it has to do with psychological analysis for traders. But the last part of it is very informative on mentoring and why it's absolutely crucial for every trader to have a trading mentor, because it's inevitable. 89% of all traders do wash out of the markets. Give yourself a fighting chance. If you're going to learn how to fly a plane, you're going to go to ground school and get a pilot as an instructor, right? You're going to learn to do heart surgery. You're going to have a doctor tell you how to do that, not books or seminars. Or if you're going to learn to play golf, you're not going to learn that in the books or going to seminars. You need a coach. So trading is one of the most important things you could be doing for your life, because it has to deal with money. And make sure you invest in the right things, and make sure you start with the investment of education. You're not going to get any bigger bang for your buck than what you're going to get right here. At Grok Trade, we'll take care of you January 21st, 22nd, 23rd. Or if you want to fly out with us to Vegas in the latter part of February, it will be a live training. So we can talk to you about that too. Mentor@groktrade.com. Take care. Safe trading to each and every one of you. Remember that capital preservation comes before making a profit.